What's up, guys and girls? That was a good gold trade. Just saw your chart. I had the exact same markup. It's a good trade. Hold up. This is for you, Daniel. This is just for you. 1 second. This is for nobody else but you. Okay. Hold up. Hold on. Yeah, man, we're having some technical difficulties. Jordan's telling me I need all this software, and I'm like, well, we'll do it next week.
Are you on 5G Wi-Fi right now?
I don't think so.
Like robot?
No, I'm not. Actually, wait, no, yeah, I am. It's being recorded too, so if it's blotchy. This is just for the game, boy.
Go hard.
Got you, bro. If you're gonna call me a hoe, you better put Kage at the end. Cause that's my ninja way. Alright. Now that I think Megan just called me a freak. Alright. You gotta love being married. My wife called you a freak because you talk about Naruto. Alright. Jim, did you say it's being recorded? Yes, it is being recorded. But yeah, so what I was saying to you when we got on here, that gold trade, that was a good gold trade. I had similar markups. Don't have the best connection. Yeah, that's fine. Usually if you back out and you join back in, it gets better. But if not, yeah, I just say catch the recording. But yeah, so we had, well, first and foremost, right, it is election day. So that is something, you really need to be mindful of today. If you're taking any trades in the market, right? Looking right at this chart here, okay? Again, the 1 hour chart on gold is my currency's 4 hour chart, right? It's my higher time frame. It's what I take structure on for gold as well as the indexes, right? And when I say indexes, I'm talking US 30, NAS 100, SPX 500, JER 30, France 40, right? Spain 225, right? The Japanese index, those types of things. So the 1 hour is going to be your structure, right? And structure is, it's the same thing with pretty much everywhere else you go. So here, right, 1 hour, we went down, right? Sort of had this counter trend line, broke, retested, came down, retrace, continue down, retrace, fails, breaks low, comes, takes these highs out here, right? Until it takes these highs out, okay? So if it comes here and it fails to break low and it comes up here, okay, and it takes these highs out, but it stays below these highs, okay, it could still go short, right? You could still just be pulling back deeper on a fib and go further short. So I'm looking for a break of this or this, right, for my next move, basically, right? So see this happen. Not really wanting to get in the market here, not just yet, because, it broke above this. So you wait, right? I like to be patient. The more patient you are with your trading, the less errors you're going to create, okay? And the less you're going to get it on. So what I do is I have very strict rules, right? So on my entry time frame, okay, my entry has to be a 62% retracement or better, okay? Looking for an entry, All right, so 15 5-minute. It's got to be a 62 or better. I know I teach, oh, hey, you can get a 38 to an 88. You can. You can get any one of those and be comfortable and confident with an entry, especially, if you're sort of on a lower time frame going off of a bigger fib or institutional level. But I am picky because I like the 3/4 market pullback. I like it coming to this. I like it pulling back 3/4 of the way to that 70% retracement level and then shooting off. It gives me the best probable entry, and basically the least risk, right? I'm going to be risking a lot more if I get in on the 38 here. If I get in at 1893, I've got to put my stops down here. Okay, so I've got to risk 80 pips if I enter in here. If I enter in on the 88, I've only got to risk 20, 30. Okay, so you see what I'm saying? Like, so my risk is going to be much, much smaller with a better entry. So, there's that. Okay, be mindful. The lesser retracement levels, right? Your first lines of defense, they're going to be much more forgiving. Okay, and when I say forgiving, if you're going to set a limit, okay. Luckily, yes. Okay, yeah. If you would have had your fib set up like mine, yeah, it would have hit that 88 and then took off. Okay, so you could have set a limit on the 88 and had a good position here. Now, a lot of the times, okay, it might not come that far. So when I say more forgiving, if you set a limit at the 62% retracement level, it's more likely going to get hit than an 88 or a 79. Okay. So that's something to be mindful of. But, with the indecision, sort of in the US dollar, I wouldn't really say it's indecision. It's going down right now until the election's over. Until we know who wins, these are going to be the market conditions. Okay. If you paid attention, I mean, there was no weekly market breakdown this week. That's just due to the fact that it's elections week. I didn't really want to post anything. Everything's pretty much fallen in line with what I was wanting to see for the week, but a video was not posted just because I didn't want anybody to go do anything crazy with their account on elections week. So, but you can see, right, that here on the 30th, so this is Friday, right? This is that Friday. That 1 hour structure was broken there on Friday. You did get an entry in here at 10. It came all the way back up here and then came back down, came back into it. And this is Sunday, right? When the market reopened. Market reopens here. Okay. Market reopens here, pushes back into this level. Okay. Not only have we broken structure, okay, we've gone from this quarter point basically to this one, right? Half quarter to half quarter. A lot of the times the pullback will be to the quarter in the middle, right? If you're going in between quarters. So, I mean, that's just something to be pay attention to as well. With gold a lot as well, I do go quarter to quarter, okay, with my gold trading. So from here, guess what? It went from quarter to quarter, quarter to quarter, quarter, heading into this quarter. Do you see what I'm saying? So quarter to quarter, either break or support here, right? It broke, so we go from this quarter to this quarter, broke through this quarter. Where did we go? Down to this one. We found support here. Where did we go? Back up towards that quarter. Came back down to this one, retested it, right? Resists it again. Finally breaks this guy. Where does it come? Down here. Finds support. Where does it go? Right? Still going down. So where does it come to? Back down here. Comes back to retest it down towards it again. Not all the way, but comes back towards it. Still went 111 pips from the tip to the tip. Right? And then it breaks back above this level now. It was just resisting. Now it's broken above. Structure is also broken. Oh, snap, right? So you've got that market situation going on. Retest the quarter, 1875. Bounces off, right? Comes up here. Wicks you above it, into it a few times. This was yesterday. Here were your entries in yesterday. Came up here. right? Rejects, comes back, bounces, okay? Expected to at least come in here. Low key, I think it could be heading back up towards 2000, just depending on, depending on who wins, the indecision that's going to occur from this kind of stuff. Um, I have two scenarios. One's for basically, one is if Biden wins, one is if Trump wins, and one of them will play out. So it's good to know both, right? So, knowing that, you can, expect, especially with the USD stuff. I'd expect gold to continue to be bullish. I don't want to be looking for buys now. We have broken, the structural fib again. Maybe you had, 4-hour fib here to there, maybe 38 retracement or so, before it bounced up. So, maybe expect some pullback again, and then look for buys. Now, coming to these are still my 4-hour fib structure never broke. Okay, it did come all the way down here to the full market retracement. Okay, it did wick below. I like to see bodies close below that. Never had a body close above it, right? And then I immediately sort of reject out. Okay, I come back, retest this institutional level here, and then I go up to the next one, right? So my overall bias here, basically for like the last week during all of this, I try to stay with that overall bias. So, it was a lot of small, 90, 100 pip winners here. It wasn't the big, 250, 300 pip moves. But quite a few, decent entries when the 1-hour structure broke here upon this retest, right? I was able to get in, basically catch from here up to here. So like I said, 80, 90 pips. There's another one in like down here I caught for like 100 pips or so. And then this entry, okay, I'll show you the entry. Again, it was a good entry, but it wasn't that minimum on my entry time frame. So I did not enter this one, even though this was the move, right, that I've been waiting on GU, because it did not give me an entry. Now, if it comes back and I can, we've sort of got, double bottom. Well, guess what happens after a double bottom? You get pullback and continuation up. If that happens, if I get something like that in the market and I can get a good pullback entry and it meets my requirements, and on an entry, 15 5-minute time frame, I can get that 62 or better, I will execute that trade. Okay, and I will show you one that was executed on GJ, right? And it was a similar sort of market situation. They sort of run congruently. This one gave me that 62% retracement entry, and this one did not. Okay, simple as that. The stricter you are, and I mean with trade management, with looking for entries as well, the stricter you are, the better your trading is going to be, because you're going to minimize those risks. Okay, you're not going to be taking bad trades. And when I say that, what a lot of people will do is like I said, they'll see this pullback, they'll see it come to the 38, the 50, and they're like, well, here's the 50. It's right above this institutional level. And yeah, it did bounce off the top this time. Okay, this time, I'll say this time. What else could have happened is I could have entered in here, okay, 8,900. And I see this a lot. This is why I'm bringing this up. So 129, I could have entered, okay? And I try to Lambo lot this because I think that, yeah, this is going to bounce off this institutional level. So what I'll do is I'll get, my calculations and everything, and I'll have like a 10 pip stop loss or something, right? And what will happen is I will place this trade and do my risk management based on that. But what I'm seeing, and it's only a few of you now, it's not a lot of you. It used to be a lot of you, but what I'll see is the market will start to pull back towards that stop loss. And instead of just taking that 1% L, okay, and then looking for a solidified entry, okay, because really over here, you still don't have one because you don't have that entry structure breaking, right, until it breaks above here and then it pulls back, and then there would be an entry, but even then, that's not a very good one, okay, so I probably wouldn't take it, right? Now, like I said, what I'll see a lot of you do is you'll enter in here. Oh, it's top of the institutional level. It's gonna bounce. 50% retracement level. Oh, make up things. Maybe you see order blocks if you trade those, whatever. And then it'll start pulling towards that 10 pip or whatever stop loss. And instead of just letting it stop you out and then again looking, you'll move it back and you'll be like, well, really, my stop should be down here. So I'm going to set this 50 pip stop loss when you've put a lot size on that should be a 1% risk on 10 pips. Now it's 5%, right? At 50 pips, basically. Like, you're doing that and then you're going to lose. Right. And then you're wondering, well, why am I'm winning a lot of trades, but I'm going negative, right? It's because you're extending these stops. If you got stopped, you got stopped, right? Or what you need to be doing, if I'm entering in here, I need to be placing my stops below this level, right? So I need to not put my stops here because what could happen? You could pull back and it could literally hit here. Oh, I got stop pointed out. That's not really a stop point, right? Structure never broke. You're trying to predict the market, and stuff like that. So again, yeah, it did come here. We did get decent price action here, around the top of this level, and the 50% retracement level. Again, it did not come. I would have rather seen it, come in here. Okay, and if it comes in here, I'm okay with the 62. I'll put stops at the 1, and if I get anything better than that, I'll put it past 1. Okay. Worst case scenario, if I do put an entry here and I get stopped at the 1 and it double bottoms at the 1, guess what? I can always re-enter down at the very bottom of that then if I get stopped out because my stops are right on that. Okay, so it happens. Guess what? 1% risk. Okay, I lost 1%. Well, guess what? Now I'm going to have a double bottom. I can pop a 3-5 pip stop loss if I know it's there, okay, on that double bottom. Lambo lot the fucking gang. And this here, if it would have come down here and I could do something like that or like this, right? And like I said, you'd have like a 3-5 pip stop loss if you did something like that. So you'd have something, that's 8 pips. Okay, that's a bigger stop loss than what you would even need. And you can see you're going to make that 1% back and 17 extra percent. So it's not that big a fucking deal. Okay, it's a numbers game. It's a numbers game. It's all it is. Okay, so but yeah, so that's what's going on there. Here was that 4-hour structure, right? Low, high, came back, right? Full market retracement, and then it went. Okay, smaller time frame broke, right? Looking for that entry. Okay, I'm looking for a break on the 15. It's my entry, all right, and then a pullback. So we had a market that was sort of like this, right? That got taken out. This was a pullback. I don't really want to count that one though, because this was sort of Sunday data. Okay, but highs taken out. And this was New York session yesterday, and then this is end of New York session entries, right, off the 50 yesterday. So it was there. Again, I didn't take it because it didn't meet my minimum entry pullback. Okay. This guy was a nice one. And if you can, and if it comes into like a pattern or something like that, like that's added. Okay. So we had a market here. There's pullback, continues down. Here was the high. Okay. When you're doing your fibs too, I mean, you've got to realize, right, you've got to keep dragging it out until you have that minimum measurable retracement. So if I did that right, because here is this level. Okay, that's it. Kind of crooked, but let's do this. Levels taken out, right? Levels clearly taken out. Candle close. Again, I want to see a candle body close below, okay? Does it close below the 382? No. Probably won't count that one, right? Pull it. Candle close below. No. Probably don't count that, right? Keep pulling it. Keep pulling it. Candles close below. Yeah, barely. Yeah, okay. Yeah, we've got candles closing below the level now. Yeah, clearly. Clearly. Okay. Guess what else we sort of have here? Well, it's off the 38 retracement. It could buy up here. Yes, it very well could. Okay. But those levels just got cleared down here. So now that they have cleared, you could probably say, yeah, it's going to buy up, right? To sell back down again. What else do you have here? 4-hour head and shoulders pattern comes back up, right? Rejects off quarter point where the head was as well, right? And the other shoulder rejected off that level. Boom, rejects, retests, right? On an hourly, you get another hourly head and shoulders pattern here with the market retest here. Okay, so you could have entered in here on all of these shorts. You have a market low, a high now. So you're looking for that entry reaction, right? You're looking for a reaction off of one of these levels to buy into the market. Now, these levels just got taken out. So I expect it to buy here, but I don't think this is going to be the buy that takes it out. Now, if it does, okay, whatever. I'll move on to the next setup. But just knowing what I know, what I don't know, right, is I would expect it to buy up here to sell further into the fib. It's just what I would expect. Okay, so we have a fib now, though, right? We can see these levels. We see the 62 retracement level lies in the 135 institutional. We have the 3/4 basically all lie in no man's land, right? In between levels. We don't really want to look for those, right? And then we have our 88, which is at the 133,750 level. Okay. So knowing what you know, right, about lining up fib levels with institutional levels, right? The first one we want to look at, well, really the first one is up here, right? When the market started to come back down, it could have hit here and then just took off. That was the first thing we looked at. Now, when it didn't, okay, and this is, you know, always check previous sessions too if you're trading right here, right? Use your session boxes. If whatever happens in London, you would expect it to continue into New York until it reverses in New York, okay? So sold pretty much all over here in London, so we'd expect it to sell during New York, which it does. Sells all the way through the Asian and London again, and then it pulls back London, New York, shorts during London. Okay, so comes into these levels basically is what I'm saying. You can see that it's not rejecting here. Okay, is what I'm saying. So that one is done. You've broken that level, especially when you retest it and you push back into this level. Okay, and you're coming to that next fib level with a quarter, right? An institutional level there. So I would then expect, and I'm going to look for signs of a reversal off of this level. Okay. And I do this. This is like what I do. I use these levels. I look for entries in and around these levels, right? So I come here, okay, and this is what I do. Okay, so I have my 4-hour fib here, right? Have the 4-hour fib. So I'm just going to quickly sort of scroll back, entry was on the 2nd, right? I'm going to look at, maybe even the whole previous week, right? So I can sort of get an idea of where the correct, because I don't want my entry, I can't have any structural points be wrong, you know what I mean? Like I can't be right on my 4-hour structure, and then when I'm looking for an entry on my 15 minutes, botch that, fuck that up. And I could get lucky and get right, but if you're messing this stuff up, right, it can be very harmful. So 15-minute, there you go. Sort of have this going on. There's a high, there's a low. That's not really pullback. So there's the next high, next low. Got to measure this out. Sort of looks like a 38. Might be a 50. If it's a 50, then it's good to go. Yeah, above the 50. So that's measurable, right? Continues lower. So there's a high right there. And that's the high actually I used to get in here. Okay, so always make sure you double check that, especially if you're not used to just being able to eyeball the market, seeing where it's at, and seeing these with the naked eye. So that's why I sort of gave you all that example there. So high taken out here, right? We are on a bigger fib here, right? 4-hour market is around the quarter point. Okay, it's around that QP here. Okay, you've got the 62. It does come down, right? It continues down. You should still be shorting up in here. Rejects off the 70. So you get that reaction, right? And it all comes back into the trading plan, right? The 2.0. You get a reaction out of that 62 to that 88, right? And I can even show y'all with EMAs. Like, I don't know if any of y'all actually use the EMAs as an added confirmation. If you do, good on you. If not, hey, you can do the same thing with structure breaks, right? So if you put them both together, fantastic. So with it, right? And I show you all this, and I teach you all this because this is how I trade. This is how you see me catch all these wonderful, wonderful entries. That I don't do anything complicated. It's everything in the academy is how I trade. Okay. The Kages, they will learn a few extra things that are not in the academy, but it's nothing crazy, right? It's ideas and concepts that I teach you, just shown more in depth and in a little bit different of a way. That's it. Okay. So you see now, right? We had that reaction out. And if I'm on here, right, whether it's a 15 or a 5, okay, the trading plan, the requirements are structure needs to break on whatever entry time frame you're on. Okay. So it breaks. It is being recorded. So if it's choppy, I'd say try to back out. If not, catch the recording. I wouldn't even try to sit through the chop. Yeah. It is being recorded. So you're looking for that. And like I said, if you're going to use, EMA confirmations on a 15, right? You want the 50 to break. Did it break and close above? Yes. On a 5, you want to see the 5-minute structure break. So again, you've got it here. And it breaks the 200. Okay? And again, you want to see it react out of that 4-hour money zone, kill zone, whatever you want to call it. Okay? And again, you don't need the EMAs, but you can see that, hey, if I pop those up, okay, boom, okay, it's hitting out of that money zone. And yes, it did break that. It broke the structure. It did break the EMA. Okay, so I know that now, right, I can hit a fib, and I can look for this market to present a tradable opportunity. Okay? Make sure these guys are pretty spot on here. Okay? Now, on my entry fib, are there any things that could stop me from getting one of these, right? Because that's on my entry time frame, that's what I look for. Yes, there are a few things. Well, we did have a market push down here and sort of already react off of the 50 institutional levels right there as well. Pretty much the 38 to the 75 are all located in that institutional level. So really it could even, from where it's at now, it could just shoot up. Okay. But again, because I have strict rules, okay, I'm able to, maybe set a limit. And here, this was set on the 60, the 2, right? And actually, I believe I got a little bit below. I got a pipette. It was like a pip and 8 pipettes or something below. So a little better than 2 pips below the 62. But that was at market. Okay, that was an at market entry. So, but basically, right, it's the same things I've been teaching you, but I'm going to wait. Yes, it could react here. Again, if it does react here, guess what? Okay, if it reacts here on my entry time frame, right, I still have my higher time frame structure, but on my entry, I'll have a market do something like this, right? Take these levels out. I'll have new lows on my entry time frame. I will use that and I'll wait and see if that gives me a 3/4 market pullback. If it does, guess what? There's my entry. I'm one intraday level fucking late, right? But you can see, just let it sort of play out. This does come all the way down for me. And again, if it doesn't, maybe you don't execute. Okay. There it is. Again, 62 entry. Like I said, mine was a little bit better. It was close of these candles, close of that candle. So it was a little bit better than 62. Okay. And then when you're here, right, what do we sort of possibly have forming here? Right? Sort of a 15-minute head and shoulders. So I'm getting, we have a reaction out of our 4-hour fib zone, right, that you draw up from the 62. And for those of you who just joined us, right, I'm showing basically the analysis I had on GJ and GU, and I posted it basically on the 2 weeks ago breakdown that it was bullish. They're coming to fruition, right? It's all about being patient. So it came right into that 4-hour zone, right? Use that trading plan. Okay. You're looking for a reaction out of this zone. Okay. On your entry time frame, right? You want to see that entry time frame structure broken, which it is here. Here's the 15-minute structure. Here's a low. Pulls back, continues lower. Right? Reacts off of that higher time frame fib 70.5 level. Takes that structure out, right? Again, if you use the EMAs, for those that just joined, if you use the EMA confirmations that I teach in that trading plan, 15-minute, you also want to see it pierce to 50. On the 5, you also want to see it pierce to 200, which it does on both. Okay? It pierces both on both. So that's double, right, confluence, basically. You then take a fib off of that 15-minute low, that new initial low, your new higher high, right? Because that structure was taken out. Maybe you mark that up so you can see that. And then again, I'm waiting for a 62 to an 88 on my entry. If it doesn't come, I'll move on to the next setup. I got an entry in here because it met my minimum 62. Okay. And I'll just sort of show you where it's at now. Okay. After a 1-to-1, right? Stops go break even. So stops break even already, right? At this point, it's almost up a 2.5, 3-to-1. So maybe even start taking partial profits, right? Reacting here, it's up in this quarter point now from major quarter to major quarter, half quarter to half quarter, right? Minor level to minor level, major to major usually. So could see it continue all the way up, and could see it realistically come all the way up here. Okay, and we'll get decent 5.6 to 1. Could go further. Stop loss could have been a little bit tighter, but again, like to keep it. I like to keep it at those lows because realistically, it could come all the way down there. And then for those of you who did just join, here is the GU. Okay, and again, 4-hour lows, highs. Okay, market did come all the way back down. Again, I'm looking for a reaction out of here, right? I'm looking to see price come in and react out and then give me an entry, right? Never did here. Bears still in the pressure over here, right? It did give us that confluence, that confirmation. So we were looking for buys over here. It pushed a little bit further down, bless you, came to a full market retest, and then immediately closed back to where it was. Okay, so it wicks all the way down, full market retest. This 4-hour candle closes above, right, where it previously opened. Okay, closes above. So takes this back out, and then you can see it stays trading back up in this zone, and then it takes off, right? Now, here for me was after this candle, right? This candle forms, this candle closes. We have this 15-minute level here, right? It's taken out. So you have your lows, your highs, you have your reaction out. You also have, if you're checking EMAs, there's your 50, right? On the 15, on the 5, the 200, you can see that it's taken out. If you go back and look at that, okay, so you have your big level here, reaction off your fib. And again, here's your pullback, reacts on the institutional level in the 50. So this one did not give me my pullback. Okay. But as you can see, it's the same thing. Like what I be telling y'all, what I be teaching y'all. It's what I do. I do the same things that I teach. It's not uber complicated, really. And yeah, so this one yesterday, from Sunday that I talked about, and then yesterday when we were up in here, didn't really get a pullback, just continued short, half quarter. It's a half quarter. Okay. Be smart about it. Start to realize these things in the market as well. Like, don't just fucking take it because, you think it should be that way. Make sure you're starting to realize these things. And you can begin to recognize these things for yourself. You said what?
Oh shit! Never mind.
And yeah, and you, as I said, you can see, like, right here's a daily 4-hour fib. This was a 4-hour fib. Came down right into that level. Okay. Waiting for a break of that. Breaks. Fib, right? It's not complicated, y'all. Be smart.